Welcome traders to this week's analysis of dollar index. My name is Vic. Thanks for joining me in this analysis. If you have been following my analysis, then you probably have seen me talking about this W structure which has been forming on monthly time frame, and that actually gives me a very good confidence level that in a higher time frame or longer period, dollar is going to find a lot of strength. At the moment, however, it is looking weak. But if we put the things in perspective, then you will see that it is actually going to be like in a very strong currency. For that to happen, let's analyze what are the reasons why we are actually saying that. It's because if you look at this W structure which has been forming, this is the impulse lag that has been created by the market. This is the major impulse lag that we can see. And overall, so far what we can see, these are just corrections. So this is a correction, but overall this is also a correction right there. So if I draw fib on this, I can see that market has come to 61.8 right there. So if I just put a line on 61.8, what we have seen is that market came to 61.8, which is a major Fibonacci level, and then fell back down, right? And similarly, actually, let me quickly correct this. This should be drawn properly like this. Okay, yeah. So because this is a major Fibonacci level, market reacted and fell down, and we are looking at monthly time frame. Remember that, this is long period, longer term scenario that we are looking at. And here at 38.2, which is also Fibonacci level, fell down. So this is nothing but basically a reaction to the major Fibonacci level, which was around there, and that also confluenced with previous structure nicely. And that is why we saw this reaction. Now, market found a support around these moving averages and then started to move higher. It tried to challenge the 16.8 once again. And once, because it has tested this thing, and because there was initial reaction like this, we were expecting a reaction like this. And so what we see right now is the fall in DXY because of this retest of 61.8 Fibonacci level that we have got. Now, what does that mean? That means that market was expected to show a downward momentum. And this has been going on for quite some time now. 1, 2, 3, 4, 5, near about 5 months or 6 months or so, it has been going on. This is the candle where the coronavirus hit the news, hit the world. That's why there was indecision around there. Otherwise, it was actually trying to go above 61.8 around there and then wanted to basically test this level out. So, what do we see from this chart? What we see here is that if I just put that line alone there, this is 61.8. Now, what we see here is that market has been in consolidation. On monthly time frame, it is in consolidation because we can draw something like this in here. Now, what is this then? This is obviously telling us that this is probably going to create an inverse head and shoulders kind of pattern. So this is left shoulder, then we have middle head, then we have the right shoulder probably forming right now. And that is also going to confluence very nicely with what a cluster moving average right there. And the move that we saw this previous month, the month of July, in a way that was kind of like catastrophic for a dollar index, for dollar strength. But if you put the things in perspective again, this is nothing new, because I agree to the point that this is huge momentum in 1 month, right? But if we look here, market has actually done bigger moves like this. Even here, market has done bigger moves like this, right? So this obviously impacted dollar by a lot, but that has happened before as well. In 2017, the dollar has made a bigger move. This move is similar to what we have here as well. So by just looking at that, we know that at some point in time, dollar is going to find a support. Now, at the moment, it is right there at the support because it has completed a good M pattern, and that means it is expected to go higher, and that's why we can see little wicks coming up right there. And last week also, it tried to go back up, but we need to be still little careful because we still have this structure available to us right there. This is the left shoulder, this is the head, and this may be the right shoulder, and that confluences very nicely with the what a moving average right that we have. So although market can still actually start to move higher from where it is right now, but there can be a move where it can fall down to that level and then start to move. That's what we are looking at from higher time frame. Now let's look at what has been happening on weekly time frame. On weekly time frame, we can see that market actually has created an M pattern, and when M pattern completes, the market is expected to go higher to at least test out the previous level, which is going to be around here. And it can also come to this level, which is 95.70. Now the previous week closed as a bearish candle, so now what we can expect is market can, if it finds like enough bearish momentum, it can actually come back down to fill this wick and come back down all the way to 91.95 that we saw. That's quite possible. Now if we go to the daily time frame, we see that there was enough momentum right there. But even before that, actually, let's take a step back. Let's stay on the weekly for now. On weekly time frame, because we have this M pattern, right, we can measure this. We can actually create an extension of this leg, and we can see that market has come to 113, and that actually completes a very nice pattern, and that pattern looks like this. It completes right at 113, and that's why the market has been struggling. But because there has been a lot of momentum, there has been a lot of talk in the media and everywhere, that's why it has got a lot of selling pressure as well, and that is why it can also come down all the way to 91.95. But we can already see that market has started to go upwards a little bit, and that can actually continue. So if this is an M pattern, we're looking for something like this to happen. If let's say the market starts to move right now upwards, then we are expecting market to come to this level which we found. So we can adjust that to be something like this. And if it starts to move even higher, then we're looking at that level, followed by another one which is going to be 90.64, 96.54. So that's kind of move is we can expect from weekly time frame. There's another thing which is actually available on monthly time frame is this. These are very good trend lines that we have. Right, that's a very good trend line. This trend line was broken, but that does not mean that it is actually it has turned into bearish, because market can actually towards the end of the month it can actually go higher back inside the trend line, and that will trap a lot of bears, and that will create a lot of a huge bear trap that will create a fake breakout as well. So it's quite possible that market may find enough momentum to go back in and close inside this trend line, but this trend line cannot be ignored. Even if the market does not want to go back inside the trend line, it may want to retest this trend line, and that will confluence nicely with 94.30, 93. We are also outside the Bollinger Band. So all these aspects are actually telling us that at some point in time, very very soon, and the dollar must find if momentum to start moving upwards. And if the dollar starts to move upwards, that means other things like gold or euro USD, GBP USD, AUD USD, they should come down, and USD CAD and USD JPY and USD CHF should go up as well. So let's look at from daily point of view. Now if I look at the daily point of view, this is the level that we are looking at as our first thing, first up. Now we can see that market tried to challenge this moving average but fell down, and then it has tried to come back up. Now if the market starts to move, then it will come and challenge this level or mid of the Bollinger Band, which is around right here. So that's quite possible. Now we need to see whether it wants to actually do that or it wants to come down to this level. So this is the decision level right there that we have. right? This is the level that we are looking at, like, for market to decide whether it wants to go up or down. If it starts to move up, then it will pick up the momentum to reach 94, 93. That means, like, as I mentioned, other correlations will also start to see the impact of that. So that's what we are waiting for. We are going to look for an opportunity to get involved, to go either long or short, depending on confirmation that we get. Now, on 4 hour time frame, what we can see that market has, it is in the process of creating this W pattern right now. And if that happens, then we are looking at something like this. This has come to 61.8. That means it is expected to come to 78.6 or even higher than that. So that's possible. So if this level is broken, 93, 94, then we are looking for a bullish move upwards. So that level is also going to be important. So let's go back to the daily and see what are the levels that we have. So these are the levels that we are looking at for dollar index, and that's my analysis on dollar index. Hope you found this useful. If you did, hit the like button, and in the comment section let me know what you think about this analysis, and what is your opinion on dollar and dollar index strength. uh, yeah, and do not forget to subscribe to my channel. Thank you.